We all stand for the pledge, please.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Linda Cook,
Call the roll.
Kathy Oldensee, here. Patrick Sellers,
Here.
Joy Sellers, and Nikki Bender have reported absent.
Okay. All righty. First order of business for this evening is the approval of minutes for August 21st, 2017. I need a motion and a second, please.
No, September 5th.
Why did I say August 21st?
Did I have a wrong thing on? It's September 5th. That's wrong on it. It should be September 5th.
Okay. Let me repeat that.
August 21st.
First order of business, again, is the approval of minutes for the September 5th, 2017 meeting. I need a motion and a second, please.
So moved.
Motion and a second. Please take a look at the minutes. Sorry about that. I didn't catch that either, God. That's my fault. Yeah, I didn't catch that. How you doing? All right. Good. Any questions about the minutes? All in favor? Aye. Any opposed? All righty, motion carries. The next order of business is the approval of bills payable. I need a motion and a second, please.
So moved. Second.
Thank you. It's okay. Please take a look at bills payable. Sorry about that. Any questions on bills payable?
No.
Madam Clerk, please call the roll.
Oldensee. Aye. Cook. Oh, wait. Well, aye.
Sellers,
Aye.
motion passed.
Motion passed. Okay.
Do you still have a
I'll
question?
ask it later.
Is it about bills payable?
No, it's probably more with us, so.
Okay.
I'll wait.
Okay. All righty. Next order of business is the audit report from the Benning Group. Please join us.
And who do we have?
We have Kyle Demas from the Benning Group.
D-E-M-E-M?
D-E-M, capital M-U-S.
Okay. Thank you.
All right.
All right. Yeah, my name is Kyle Demas. I'm a senior accountant CPA with Benning Group. I've worked on the audit here now for 3 years. This will be my second year managing a new job here with you guys. So, first off, we can start with the bound audit report that you have in front of you. We'll start on what is page 1 and page 2. That is essentially our auditor's report to you. When it all comes down to it, that's what you pay us to provide is our opinion on the financial statements. And if you look on page 2, about top quarter of the page, that paragraph there says that in our opinion, the financial statements referred to above present fairly in all material respects. So essentially you have a clean, unmodified opinion on the financial statements. So as we go into the financial statements themselves, page 4 starts with what we call the government-wide balance sheet, statement of net position there. That reflects all funds combined. And then page 5 is the income statement relative to all governmental activities. If you look towards the bottom of the page, the change in net position is basically your net income number for the year on the government-wide basis. So 173,000. Last year, showed there was a $27,000 basically net income for the year, but that was including a $96,000 loss on the sale of that building. So looking year to year to last year is not the best comparatively because of that kind of unusual item that was in there last year. So if you're looking at where you landed for the year, $173,000 in the black there. If you flip over to the next page, that starts your government fund financial statements. As you can see, there's a column for the general and the general assistance fund, and then the remaining funds all get lumped into that third column there. So that's your balance sheet side, and then page 7 is the income statement side of that. And again, if you look towards the bottom, there's the net change in fund balance line. So you'll see your general fund operated at just about a $19,000 deficit for the year. General assistance was $170,000 in the black, and then your combined other non-major funds were $30,000 there. So total for the government fund side was $180,000 in the black for the year. Difference being between there and then the government-wide savings at the front, where I said $170,000, is depreciation that isn't factored into your cash basis financial statements as what it says then.
Okay.
So that's the difference that's shown there. You can see on page 8 that goes through that very reconciliation of the two net income numbers right there. So starting on page 9 is the notes. Much of the first several pages are standard language that kind of the basis for the type of accounting that you do and how things are handled. Nothing that changes year to year in those first several pages. If you look at page 16, the note that covers deposits and investments, you might recall last year we had an issue where there was about $20,000 in deposits that were uncollateralized at the bank. Basically, they were in excess of FDIC limits. They didn't have them secured. It had to do with an issue on the bank side. So since then, last year when we had that issue, we got it cleaned up. And for this year, then everything is secured by FDIC limit or pledged securities. So I believe Joy is looking at that monthly when she reviews the bank reconciliations as well to make sure that issue doesn't come up again. So happy to report there that that issue was addressed, no problem. Goes on to a couple more detailed notes on your capital assets. We don't have any additions this year, so just a little bit of depreciation that was picked up. Goes through some detail on the restricted net position, note 4. And basically just those particular funds are restricted for what they were established to do. Property taxes, and then it goes into a long note on your IMRF and your participation there. One thing I like to call out is on page 20. There's a lot of numbers floating around in there, but at the end of the day, the expense to the township for that IMRF expense was $75,524 right at the top of page 20. So that's a number that folks often like to see is how much are we actually paying for this. The next several pages go through a whole lot of detail on actuarial calculations and what your liability would be if the state were to go under. A whole lot of detail stuff there that's, yeah, we hope we never have to deal with it, but so if you have any questions, I don't really want to dive in and try and explain any of that unless someone has specific questions on it. I certainly can. So after following there, goes into a few more footnotes, covers the lease, that you got one more year on that. Some more standard wording in notes 9 and 10. And then note 11 covers a couple of interfund transfers that were done during the year to facilitate some operations in some of your various funds. So that is the extent of the footnotes. Then go into some budget to actual comparison schedules for your major funds. So you want to see line by line necessarily how you compare to your budget. That'll certainly give you an idea there. Again, I'm not going to go through any of the detail unless you got a question, and I can certainly try and address that. If you look at page 32, note 2 on page 32, this is our notes to those comparative schedules, and there it says that the township operated all funds within the legal confines of their budgets for the fiscal year. So that's kind of the most important thing there. The next few pages, again, more actuarial type information on IMRF, so if you didn't get enough the first time through, there's some more for you. And then the last few pages are the detail behind those combined statements up in the front. So where I mentioned all those non-major funds were combined together. Page 36 would start showing all the detail for those particular funds, which all rolls up into that summary at the beginning. So that is the financial statement portion of it there. The other letter is basically our required communication to you as the board. The first part, first page and a half, is really a lot of standard language, our information to you on what our responsibilities were as part of the audit. I know it says that we didn't cover any significant difficulties. Working with Liz and Patrick is usually seamless. Certainly responsive to our questions and gather the information quickly if the answer is not readily there. So no issues whatsoever in that regard. One thing I will call your attention, at the bottom of page 2, there were 3 journal entries that we posted as part of the audit that for our purposes we considered to be significant to the financial statements. The first one was an adjustment to correctly classify those transfers that were made. Second one was an adjustment to the real estate tax revenues that were received. They were all there, they just landed, we'll say, in the wrong fund. They got put in the wrong pot in QuickBooks. And then the last one was unemployment insurance posts automatically in QuickBooks, and it didn't get reclassified to the insurance fund where it's budgeted. So we did a journal entry to move that. All 3 items we discussed with Patrick and Liz when we were out during field work, and it's my understanding that they'll all be remedied for next year. Much improved from where we were a few years ago in that regard. Things have been a lot cleaner as far as our journal entries and corrections that we need to make. So the rest of the letter goes through some of our internal control, some non-figures type stuff, more procedural type things. We had 2 items that we address as significant deficiencies in our audit. One being segregation of duties, an item that any small municipality is going to have. So nothing that is critical of your procedures or any 1 or 2 people within your organization, just simply more of a reporting formality or anything for us that there is limited staff, so there are overlapping duties that we would otherwise like to see separated if possible. So the implementation of the review bank reconciliations and that in the last few years has obviously helped mitigate some of that risk, but just the fact that Liz has her hands in a lot of areas, we'd be negligent not to put a comment such as that in our report. The second one on page 5, again, goes back to the material journal entries. So we just obviously recommend that financial statements be reviewed periodically, especially at year end, to make sure any of those entries that can be made are made before we have to come out and do it. So again, those were all items that I believe can be easily fixed for next year. So yeah, overall, clean bill of health on the financial statements and just those 2 small items procedurally for that goes. So any questions? Any other questions on these?
Any process for something? Oh yeah, well, to begin, the term, like, repeatedly, it keeps saying the modified cash basis of accounting, which is not accepted by the United States of America as a effective or a standard accounting practice.
It discusses the modified cash basis of accounting because US generally accepted accounting principles would be the accrual basis of accounting. And you don't follow the accrual basis of accounting. So the modified cash basis of accounting is an acceptable method. It's just not what they consider US generally accepted accounting principles.
Okay.
So no issues with the basis of accounting. It's just our report has to call out if it's other than US GAAP.
Okay. Is that the GAAP?
Yep.
Okay.
And I think we adopted the modified accrual on the advice of our auditors.
Probably doing a full accrual type financial statements. If you look at those notes regarding the IMRF, you would have significantly more time and our fees into generating the accrual type liability entries necessary to record IMRF. So feasibility wise of the township your size, the modified accrual, modified cash certainly is an appropriate way to go.
The modified accrual says we count liabilities when incurred and revenue when received, correct?
Yes. Yes.
It's a very conservative type of.
Yep, it's
accounting
basically
system.
cash in, cash out. That's when things hit the financial statements. And for the government-wide purposes, we record capital assets and invested in capital assets and record depreciation. That's kind of the only caveat to the modified cash, modified accrual basis, yes.
And it's permitted under the Gatsby rules.
Correct.
So the segregation of duties, what the suggestions are to have, just to split it up, are we doing anything to remediate this issue?
We're doing all that we can to remediate that issue. With the township our size, it's very hard to do that without hiring extra staff.
Okay, and then, because then with the financial reporting, it says to have a township member that is appointed as like a treasurer. Are we doing that?
We have trustee Sellers, she comes in and she reviews the financial statements with Liz every month, if I'm not mistaken.
By state statute, the supervisor.
Right, I'm the
acts
treasurer.
as the
Technically
treasurer
the
of the
treasurer.
town.
Technically, I'm the
Most
treasurer.
governmental units have a separate person
Mhm.
entitled treasurer. State statute doesn't provide for that for townships. They have the supervisor provide those
Right.
functions.
And that was at a recommendation of ours a few years ago to have someone act in that capacity and review bank reconciliations and so forth.
Okay. So on page 10, it says that everything is in one category of government. It seemed almost like, should it be further separated? Or should there only be one major category of fund, like this paragraph? It says there's only funds in the township government is not one major category.
Governmental, and what that means for our reporting purposes is there are governmental funds, there are enterprise funds, fiduciary funds. If you operated the Water and Sewer Commission, there would be an enterprise fund. So all of your funds are governmental funds. So they all fall within that category. You don't have any water, sewer, garbage, villages, and so to speak, that have those kind of things. They account for a separate, and it adds another line to your financial statements for those enterprise funds. So all of your funds fall within the governmental category.
Or don't we have one fund that is the taxes paid by the employees, their share of the taxes? And won't we have that in a fiduciary fund before we forward that on?
It's FICA. The FICA fund is still considered a governmental fund.
Still, okay.
Yes. Yep.
says on page 12, last paragraph, the overdraft result from expenditures which have been approved by the township board. Is there a way we can be aware if we're approving beyond the funds we have available so that we're not incurring overdraft charges?
And essentially what that's alluding to, yes, if you look at the financial statements, you have one combined checking account that goes across all the funds. So there are times when expenditures in a given fund may overdraft essentially that fund's particular balance of the overall checking account. Now there's cash in that fund, say the audit fund overdrafts, there's still money in the investment account, so total cash isn't negative. But when you take all those funds and combine them into your checking account, basically, in your case, the general assistance fund subsidizes the way it looks on the financial statements, some of those other expenditures. Now, there's cash in those funds in the investment account, it's just not sitting in the checking account.
Okay.
So when the checking account goes over for that particular fund, we have to report it that way. And if you look, what page to give you an easy example. So on page 6, if you look on the line under general assistance fund towards the top where it says due from other funds, 62,000, and then if you look down below in the liability section where it says due to other funds, the total of those two lines, 62,000, that's basically where the checking account in particular was short to cover the expenditures in those funds. So it's just a matter of where the cash was sitting between checking versus the investment savings. Just a reporting formality for us.
This bit about on page 15, the reserve funds, the township has not established fund balance reserve policies for their governmental funds. What would that be, like, fund balance reserve policies, such as?
If you were to designate a portion of your fund balance for something specific, we would have to report it as such. If you were to, what GASB 54 calls assigning fund balance, I assume the board generally has the highest decision-making power to assign a fund balance for a particular project or a certain upcoming expense that you could earmark it for if the board thought was necessary.
I was reading that. Thought it was referring to the reserves, like the unspent amount.
Well, there is policy that you could put in place also where
Reserves policy.
where you could essentially create a minimum fund balance policy too, where you couldn't approve expenditures if your fund balance was below a certain mark, but yeah.
The custodial credit risk on page 16. Maybe I didn't catch you explaining that.
Banks insure depositors up to $250,000.
Yes.
When your deposits exceed that amount, the bank can pledge securities that they own to cover those excess deposits. Say the bank were to go under, you could collect on those securities to recoup your deposits. Last year, there was an issue where deposits were in excess of the value that they had pledged to you, and we got that straightened out with the bank right at the end of the year last year. So this year, that note just says, of your total $1,180,000, you got $932,000 that are above the FDIC's automatic insurance that are secured with pledged securities.
But it has since been managed.
Right now it is fine. It's 100% covered. And that's one thing that Joy examines every month.
I did have just a little question about this. Can you, like this table?
Yep, so at the bottom of page 22, in the actuarial assumptions for IMRF, that line that says total pension liability and then the net pension liability, the planned fiduciary. So basically that's showing what the responsibility would be of the township for future IMRF payments to retirees if the state of Illinois were to default on their payments. It figures in a discount rate of 7.5% in their actuarial valuations. So that table just shows that if their actuarial calculation was off 1% too high, 1% too low, that's the change that could impact that pension liability. So as they show it currently, you have a $355,000 pension liability at 7.5%. If that discount rate decreased to 6.5%, you'd have a $690,000 pension liability. So it's all trying to calculate future earnings and future payment amounts and lots of complex actuarial calculations. That table in particular is just one that we're required to report to you.
So the total pension liability plan and then net here,
Total is the total. That's what's due.
in any year?
That's what's due to be paid out to former employees. That's
In
their
a
actuarial
single year.
calculation. Well, total. Not in a single
Over
year.
the
Right.
time of their
Over their
pension.
life expectancy. Yes. The planned fiduciary part is IMRF's portion, what they are required to pay, what they are short to the state of Illinois. And then the net pension liability is that of the township.
But how, the net, this 396,000 over what time frame? Over the life of the pension? All of this is over the duration of.
That's saying basically as of right now, if the state of Illinois were to default on all of that, that is what the township would be on the hook for to pay over the life expectancy of your retirees.
Okay. I think that's it.
So if anybody else has anything, take it home and start browsing through it. Certainly, we can know how to get a hold of us, so
Absolutely.
not a problem.
Thanks, God.
Thank you very much.
Thank you.
The next order of business is the supervisor's report. Has some things to hand out. This is the expenditure, the budget report for this month. Here, it's showing our, I'm sorry, this is our settlement. What we're gonna receive. This is our expenditure, the budget report for this month. Sorry about that.
This is number 4, settlement number 4?
Yes, number 4.
From the state, right?
Yes.
From the county.
Can I hand that to Mike? What I'm going to hand out next is a legislative issue proposal form. So if there's something you want our legislators to know, you can fill this out and send it to them. I'll let you know right now, mine's going to be full. I got a lot to say.
Thank you.
Bart?
Thank you.
There you go. Mike one as well.
And this just only has to do with township, right?
Yes.
So who would it go to? Like state legislative proposals for the township?
What we would do is you give them back to us and we'd send them down to TOI. And then TOI will give them to, I think his name is Tim Bramlett. He is our, kind of like our lobbyist.
Lobbyist for the
Yeah,
township.
so, and he would,
Tim, what?
Tim Bramlett. Mhm. What I'm going to now, wait a second. Trustee Cook. We have 26 people on our caseload right now.
There's two. 26.
26. 11 pending. And we have 4 that we got returned today.
Return application.
Yes. All right. Okay, the next order of business is the assessor's report. Assessor?
Other than to share that we've sent our books over, we're proofing them, and probably before the next meeting, we'll have Freeport Township assessments for 17 published. I don't have a date yet, but
Okay.
that's all we have.
So you're waiting for that information, is that what you're doing?
And now we're going back and forth proofing.
Okay, so you're proofing the
Proofing with
report.
the county.
Proofing with county.
Okay,
Right.
and that's the assessments you're proofing?
Correct, 2017 assessments. That's it.
Okay. Next order of business is trustees report. Trustees. Huh? Next order of business is public comments. Public comments. Any other business to come before the town? I will entertain a motion to adjourn till Monday, October 2nd, 2017 at 5:30.
So moved.
Second.
All in favor? Aye. Any opposed? Meeting adjourned.